Your mic is mute.
Yeah, you can start now. You can start now.
All right, all right. So, good evening, guys. I'm Well Eagle, founder of Caspi. So I will quickly and briefly be talking about cryptocurrency investments, okay, and portfolio diversification. So it's something that is quite basic. So I'll be going over the basics. Here we'll talk about what cryptocurrency is, all right, the market potential, types of cryptocurrencies, and understanding the risk in crypto investments. I would get a lot of things around portfolio uh, diversification and crypto investment. So I'll take it bit by bit and we progress. So talking about cryptocurrencies are just digital assets secured by cryptography and built on the blockchain technology. What do I mean by that? These are cryptocurrency. There are many types of digital assets, but now cryptocurrency in itself is a kind of digital asset that is secured, all right, by cryptography, and it is built on the blockchain technology. So this is a kind of currency or digital asset that runs on the blockchain. That's just basically what it is. So we'll be looking at different types of uh, cryptocurrency. So the market potential of this thing, because we are talking about cryptocurrency investment, so why should you invest in cryptocurrency? Okay, why you should invest in cryptocurrency is number one, the market potential. Okay, uh, across the years, we've looked at how different cryptocurrency have increased in financial gains or what we call market capitalization. We look at Bitcoin, we look at Ethereum, we look at Solana. Even though the market is currently going through a downtime, if you look across the years, especially using Bitcoin as a case study, you see that from 2000 to now, Bitcoin has made a rally. It has been increasing at different times and levels. So this is to show that people are adopting cryptocurrency. So the proof of that people are adopting cryptocurrency is that there are many people buying it. So as people are buying it, it is gaining more market value, driving to the increase in price. All right. So this is to show you that the crypto market, apart from Bitcoin, so now Bitcoin is not very costly. People can really afford one Bitcoin. I mean, a lot of people can afford one Bitcoin now, even though I think it's $8,000, but a lot of people can't afford it. So people will start going for other low priced and low market capitalized cryptocurrency. All right, the ones that are maybe around 50 million market cap, 100 million market cap, 1 billion, 2 billion, 3 billion, 10 billion, that are not super costly. All right. So people can go for projects like that or cryptocurrency like that and purchase. So this is like why you should invest in cryptocurrency. It's just like every other kind of investment because of high yield and return. All right. So that is one opportunity or the major thing why you should invest in cryptocurrency. That's why it's called an investment. Why make an investment is to expect a return. Okay, talking about different types of cryptocurrency. All right, there are the different people categorize it in different ways. You can categorize it according to uh, payments, cryptocurrency, utility tokens, stable coins, and you know, uh, stable coins and central bank digital currency, SCBDC, central bank digital currency. So I think that was before, but I was making a recent retrial. I found out that they now categorize it as Bitcoin, altcoins, uh, stable coins, then meme coins. These are like now if you check out types of cryptocurrency, even though like different people categorize in different way, but we'll be working with this one tonight. So the four major type of cryptocurrencies now we have is Bitcoin, altcoins, stable coins, and meme coins, or low cap tokens, as popularly called. All right, so I'll just be giving an insight of what these coins are. So we know, probably you must have heard of Bitcoin one way or the other, the first and largest cryptocurrency. Uh, that is Bitcoin. Even before I knew what cryptocurrency was all about, I already started hearing about Bitcoin as far back as 2016, 2015. All right, I heard about Bitcoin then. So even though I didn't really know what cryptocurrency was, what blockchain was, but then it was serving as a payment system for this MMM United, or MMM US, I think that was what it was called then. So I already heard about what Bitcoin was. Right. So that is basically what Bitcoin is. It's the first cryptocurrency and the first and largest cryptocurrency. That's why if you go to, according to market capitalization, if you go to go to maybe CoinGecko or CoinMarketCap, Bitcoin will always be the first there. All right, so that's because it's the first cryptocurrency and it's the largest cryptocurrency according to market capitalization. All right, so I think even in price too, I think is the even in market price, I think is the costliest. All right, so moving on to the next type, we have altcoins. Altcoins are just known as alternative to Bitcoin, all right? Altcoins. So this is where Ethereum, Solana, BNB, every other kind of cryptocurrency, they fall under, all right? So this is things we are conversant with, so I won't dwell so much here. So we now have stable coins. Stable coins are pegged to fiat currencies for stability. Things like USDT, USDC. So these are examples of the stable coins. I was hearing that Nigeria launched their own stable coin. I'm still making my findings, so I'm not really sure if it's something that is like officially in exchanges. So, but I was hearing it. So now, this stable coin, the progress, because the world trade now, in world trade, most people use dollar in world trade, even though some countries no longer use dollar as a medium of world, financial measurement, or yardstick. But currently, we have USDT and USDC. Okay, they are dollar pegged. Okay, and it's something that is globally accepted. All right. So these are examples of stable coins. So the last one I mentioned when I was mentioning types of stable coins is meme coins. Meme coins are kind of cryptocurrencies that are high risk, high reward investments. All right, high risk, high reward investments. What do I mean? They have their market cap is very low. You can see some market cap as low as 1,000, 2,000, 5,000 market cap. All right. So 10,000 market cap. So these are very low caps, 50,000, 100,000. These are low market cap meme coins. Another thing about meme coins is that they don't really have use case. They are just community launch tokens for fun. Example is Dogecoin. If you remember Dogecoin, then Dogecoin was is the leading. When you talk about meme coin, talk about Dogecoin, all right? Before Elon took it up and it blew up everywhere. Then another one was SHIB. I think even though SHIB is working, I think they were talking about working on Shibarium, having their own blockchain, something like that. So, but SHIB before then was also a meme coin. Floki Inu. These are like different meme coins that were launched that made it to top exchanges. All right. So, but now low cap ones. Then before they made it to big exchanges and now safer, they are now safer to trade. Pepe. Yeah, Pepe Bonk. Bonk they have a trading this thing, so it's not completely meme. So like Pepe now, Pepe was meme before they got listed and everything. So one thing about this low cap token, like I mentioned, is high risk, high reward. So when you buy them as low as 5K, 10K, 20K, 100K, all right, it's very risky because projects project that is at 100K can easily go down to zero. But project that is at 50 million, 100 million, 100 million, 200 million, 500 million, it's not really easy for it to just go down to zero like that. Sure, you get. So it's not really that easy. Yeah, it's not like it can't go down, but it cannot just, your whole money cannot just wipe out of the market. All right. So that is the thing. That's about meme coin. So another thing we need to look into is understanding the risk in crypto investments. All right. So I'll be mentioning some uh, risk you need to understand before you venture into crypto investments. All right. So because we're still talking about crypto and crypto investments. So in crypto investments now, uh, one thing you should look out for is market volatility. A volatile market, basically, because you should understand that the market is volatile, the crypto market is volatile. You can come, like yesterday, for instance, yesterday was Sunday, by evening, market was all up, green was everywhere. But in just about 24 hours, everything has gone down again, all right? So this is to show you how the crypto market is. Okay, it's volatile, it's fickle, small thing like this is going up, another small thing is coming down. So you should be able to understand that it's a volatile market before you invest. Price they fluctuates frequently due to speculation news and regulations, security risk. You can think about crypto investment is like the risk there. So you have to be very, very sure, things like hacking, scams, and rug pulls. For those who are rug pulls, is for those who go into meme coin trading. All right. So you have to be very cool with these things, or you have to be sure of these things. All right. So then another thing we should pay attention to is regulatory uncertainties. All right, because crypto is still something that is yet to be accepted. All right, even though with Trump being the president, who is like a pure crypto believer, all right, but it's still something that takes time to get accepted. So with this here, there are regulatory uncertainties. So changing laws can impact the investment security. So I know there was then when Biden was president, I know SEC was just suing some crypto platforms up and down, some blockchain companies. They were just suing them left, right. I think then this XRP really suffered a lot in the hand of SEC. They were suing them, they win, they sue them again. They were just suing them back to back to back. All right. So it's just like this one Trump became president. Some of these charges started dropping. All right. So um, that is another thing you should be careful about, because it's still a new kind of tech. Yet that been existing since 2009, but I mean it's still new because we really have a long way to go with this crypto thing and blockchain thing. So there are new rules. The government have to make out time. The world government has to make out time to accept these things. Like in Nigeria now, crypto is not legal, all right? So crypto is not legal in Nigeria. So these are the things that could really affect cryptocurrency, the risk that could affect cryptocurrency investment. So another thing is liquidity risk. Well, this one is mainly for people who are trading, low volume or low market cap cryptocurrency, the low meme coin trading. So the fear of liquidity is because you can buy a project and you can come back and there's no liquidity. You can't sell off the token you bought. So it's something you have to be careful about, something you have to be careful about. So these are some of the risks you should consider before investing in cryptocurrency. Then I'll say something about portfolio diversification. So portfolio diversification is a method to reduce risk in crypto investments. All right, did you get that? Portfolio diversification portfolio diversification strategies, all right, is a means to reduce risk during crypto investment, or is one of the ways to reduce risk during cryptocurrency investment. So there are other ways to reduce risk, but portfolio diversification is one of the renowned way. And before I even start talking about different portfolio diversification strategies, I'll share a little story. All right, how you can diversify we'll share some strategies on how you can diversify your portfolio. So there was something that happened. There was something that happened uh, this year. So I got an update, about some list of Solana based cryptocurrency. I think about five of them. Right, about five of them. So what happened was I discovered that the first one I wanted to buy, I wanted to like, okay, I think I had about five Sol, or was it five Sol or seven Sol? Solana, I think eight. I think it was up to eight. So it was up to eight Solana. So I wanted to spread it, right? So I wanted to spread it across these projects. They were AI Kini. So at the first one, I was like, let me just, because sometimes I like investing heavy. All right. So at some point, I was like, okay, let me just put all the whole money in this particular project. Like the first one I came across. My second thought, I was like, let me just split and spread it across this. Since there are five, different places, let me just spread the money across there, and So, and thank God I made that move. That is what we call pursuit diversification. That is, you don't put all your whole money into one project, you spread it across. And that is one key thing about investment. That's why even generally in real life, in real world investment, you don't, you can't just say, oh, it's only crypto you'll be doing. No, that's not right. You can invest in real estate, all right. You can invest in other things, all right. You can start up a business. It's just about portfolio diversification. There are a lot of things. So even if you are making money, all right, like now, even if you are in the crypto space, this is like a digression for some of us. Even if you are making money from the crypto space, look for other things where you can channel that money into. Don't just put everything back to crypto. It's one of the mistakes I made in my early years of crypto, maybe as far back as 2021, 2022, because when you make money from crypto and put everything back to crypto, maybe you're wanting to make more. Your daddy doesn't own the market. In fact, in the actual sense, forget that we hype crypto and we'll talk about crypto, about being the future. Crypto is one of the like I said, it's very volatile. So, and some mistakes you can make can cost you a lot. Okay, it's not super safe. It's not like a guarantee investment, all right? It's not a guarantee, even though no investment is actually guaranteed, but it's just like a high risk, high reward kind of an investment because it's still new, all right? So I remember because me checking now as far as 2021, 2022, I know I lost quite thousands of dollars, all right, because of one or two mistakes out there. So if I know some of the money I made from jobs and stuff like that, maybe I started any fiscal business, and then if things were not even really costly, and then things were not even really costly, and maybe I started a fiscal business, or I started something, that would have grown into something else by now. That is just a digression. So naturally, living in real life, apart from the whole crypto, the other stuff now, learn how to diversify your um, investment. Don't just carry your whole money as one kind of investment. You can start one at a time, but as you make progress, channel funds to other things. All right. So like I said, so in my own case, so I later split the money into those five different projects. Funny enough, even though, okay, currently I'm on loss in all of them, all right, I'm not because of the whole market shit, all right, but the one that I'm losing about 80%, the one I'm about 80% loss was the one I wanted to put the whole money inside. Right. The one I wanted to pump all the whole money. I think it was around 8 Sol. Yeah, if I'm not mistaken. About 7, 8 Sol. Yeah. So I wanted to pour in the whole money there. All right. So it would have been a very wrong move. All right. But since I spread the funds out, I am I'm down minus 80% there, but other places, the other one is like that one is minus 70, the other one is minus 50, the other one is minus 20, so it helps you don't lose heavily. All right, so this is just like a risk management strategy. All right, so it minimizes your loss. So just imagine that, oh, maybe that one that is minus 80 that I invested everything there. That means in my total portfolio, I'll be down minus 80. So if that minus 80 means if it was 7 SOL I invested, all right, I might not even have up to 1 SOL. All right, I might not even have up to 1 SOL. I just have about 1 SOL, which is quite fatal. All right, which is quite fatal. So this is one thing we should be careful about. Okay, so talking about, I just wanted to share my own personal experience so that let's not be like, okay, I'm just giving you gist. So portfolio diversification strategy, there are different ways to diversify your portfolio, which is like there are different ways to, maybe you want to invest in different projects. There are different ways to go about it. A sector-based diversification, that's the first one I'm looking at. So you can sector-based diversification. All right, sector-based diversification is what we're looking at. So maybe you can, how this sector-based diversification works. I've explained this in our previous class, but I'll just go over it again. So maybe you can decide to buy layer 1 blockchains. Okay, this is like a sector because you're using sector-based diversification as the name implies. So now you're focusing on layer 1 blockchains. So you can buy things like Bitcoin, Ethereum, Solana. These are layer 1 blockchains. All right, so this is a sector. Then maybe you can now say, okay, let me buy DeFi projects too, things like Uniswap, Avalanche, MarketDAO. All right, then you can now say, okay, let me buy gaming projects. All right, gaming and metaverse. So that's to focus on like things like Sandbox, Axie Infinity. These are like gaming projects. Okay, then you can have like, okay, let me buy meme coins. All right, maybe you can be like, okay, let me buy Pepe, let me buy Pepe, let me buy some of these meme coins. Maybe Peanuts, all these meme coins there. So you get what I'm saying? So this one now is sector-based diversification. So we'll be looking at market cap allocation. This is portfolio diversification according to market cap. That is just something. So you can be like, okay, I will invest like in large market cap, things like market cap. Large market cap is things like Bitcoin, Ethereum, Solana, those big caps. When you are those tokens, projects or cryptocurrency that are the large caps, they are called large caps. Things are Bitcoin, Ethereum. When you go to your coin market cap now, can I share my screen? Okay, let me share my screen and see if I can do something. Can you see my screen?
Yeah, we can see it, sir.
Okay,
We can see it.
so let me just see. Do I still have CoinGecko here? Sure. All right. So I just want to quickly show us something so that we move along. So when I'm talking about, okay, now if you can see it now. So this 1, 2, 3 USDT, XRP, BNB, Solana, USDT, ADA, Doge. This top 10 now. In fact, large caps comes down to, I think, top 50. All right, top 50 projects according to CoinMarketCap are called, or at least according to market, are called large caps. All right. So your first 50, you're looking at your first 50 cryptocurrencies. So you categorize them under large caps. So now I want to invest in large caps. So you're looking at, maybe I won't suggest Bitcoin. Maybe you look at things like XRP, BNB, Solana, ADA, Doge, all right, TRX, Link, XLM, Leo, Avalanche, Sui, Litecoin, Ton, Sheep, all right, DOT, and the rest of them. That is a Polkadot, Uniswap. These are like, you can categorize them as large caps, all right, because like some of them now, if you check their market cap, okay, this one, Bitcoin is 1.7 trillion, Ethereum is 262 billion, XRP is Why I'm skipping USDT now because it's a stable coin, so it's not an investment. So if you just want to hold a stable coin, you can hold USDT and USDC. So that's why I'm skipping them. So, but if you want to buy a coin that will appreciate, Bitcoin, Ethereum, XRP is 141 billion, BNB is 84 billion, Solana is 74 billion, ADA is 31 billion, Doge is 30 billion, Stet is 20 billion, Tron is 19 billion, Wrapped BTC is 11 billion, Link is 9 billion, Stellar Lumen is 9 billion, and it keeps going on. So you can you can make your research and buy some of these large caps, all right? You can put in your money. And normally I suggest that to play on the safe side, even though sometimes I don't really advise buying these large caps. At least it's good you hold one or two large caps. Things like Litecoin, some of these new projects, possibly that came out during the dip, all right, or when market was down. Projects are launched when market was down. Things like this Sui, Ton, most of the people that became prominent. Or you can just check them out and see some of them that really went down in price on everything and market cap. All right. So you can buy according to large market cap. Then mid market cap now is or some of these projects. So mid market cap is projects around 50 down to 50, 70. These are like mid caps. All right, mid caps. Then small caps are just those ones, where you have those ones around 1 million market cap, 1 million market cap, 1 million market cap, 3 million market cap, 50 million market cap, 100 million market cap. All right. So once you just keep going down, so those ones are like the low caps. All right. So why I'm just trying to explain this thing is so that we really understand. So you can, do your portfolio diversification according to this market cap. All right. So another one is a stable coin allocation. So if there is something people really miss out, I was talking to a friend, I think that was yesterday was Sunday, yeah. So I was talking to a friend. I told him that see, one mistake I made earlier in my crypto when I said is you carry your money and put back in everything. That is a very wrong. All right. You mustn't always invest. Sometimes just leave your money as USDT, stablecoin or USDC. Because opportunity will come where you have to use those funds and invest somewhere. Even if you don't leave them in USDT, leave them in things like Ethereum, Bitcoin, some of these big caps that even if they move, even if it drops, it won't really affect your portfolio. All right. So like now, if you have like $100 and use it and go and buy Bitcoin, I mean, if Bitcoin even drop from 100K to 80K, it won't affect you much. You might just be losing like about maybe $3 or $5 or at most $10. All right. I don't think it might even be up to $10. So, so that's the thing. So you get what I'm saying, all right? So that's the thing you need to understand. Always allocate some funds to keep it a stable coin. It helps us, it's also part of diversification. So there are different investment strategies for different market conditions, all right? So there are different investment strategies for different market conditions. And we have two major market conditions, the bull market and the bearish market. Okay, so the bull market strategy now is for a bull market strategy or for bull market, the best strategy to use is number one, focus on momentum trading and holding quality altcoins. So when we're expecting the bull market, you hold quality altcoins that will make moves. Learn how to take profits, all right? Because taking profit is another mistake I made earlier. When profit is coming and you don't know how to take it, learn how to take profit. Yes, I know there's this group you want to make the $1 out of a Bitcoin. No, don't always be like that. All right. market goes up and they come down, learn how to take profit, secure your profit. All right. Then another thing, when markets are bullish, people are tempted to go into leverage trading or what we call futures trading. Be careful, trade with caution, because sometimes these things are not super. In fact, tomorrow, I don't encourage you to go into future trading. But if you just feel like, okay, something you want to try out, all right, be very, very careful with futures trading, because when in the bullish market is when people are easily carried away and market can easily be manipulated, because you might just think, oh, this thing is going on, and you just see some tweaking news and everything goes down, and you lose your money. So just be very careful with this, and you know you invest what you can afford to lose. That one is like a golden rule. Okay. So in the bearish market, all right, allocate more funds to stable coins. Like I was saying earlier, you allocate more funds to stable coins and blue chip assets. Blue chip assets. Who can tell me what blue chips assets are? Blue chip assets. Can anyone tell me what blue chips assets are? Blue chips assets. Let me type it. Blue chip assets. Who can tell me what blue chip assets are?
Like they are high value assets that are like
Yeah.
stable coins, something like that.
Yeah, they are actually high value assets. You are correct. That's what blue chip assets are. They are high value assets. So allocating your funds to stable coins and blue chips assets, which are high value assets, things like Bitcoin and Ethereum, these are like moves you can make when you are expecting a bearish market. You expect that, oh, a bearish market is coming. All right, so we're about to take this. You convert your money to stable coins or Bitcoin. Some of these ones, when they make, even though they make big moves, they really affect your funds. All right. So yeah, so things like that. So use staking and yield farming. All right. Maybe if you are holding, maybe decide to hold during the bearish market. Instead of allowing your funds to lie lifeless in your wallet, you can stake them and use them, or engage it in yield farming to earn passive income. All right. So, but the thing, before you use some of these platforms, please verify them. All right, verify them. Don't just they tell you, oh, there's this yield fund that is giving high returns. You carry your money and go and put there, and they disappear. So this is crypto. All right, it's not regulated. So be careful when you are staking or participating in any yield fund. Then during these bear markets, an ultimate thing is buy undervalued assets. There are some assets that in the bearish market they get very undervalued. But if you look at this project, they did so well. All right, they did so well. So you buy them. All right, you buy them. So things like currently, I was talking about EGLD. I was talking to somebody. I was like, check out EGLD. EGLD is one project that during the bullish market, it was so hot. Like during the last bullish market, EGLD was over $500, but now I think it's around 20 something dollars now. All right, so that is like over $500 now. So around 20 something. I think it's around $21. I don't think it's even up to $25. Let me. Because I'm actually holding some amount of it. Here is around $23. All right. So this, if you check EGLD and you're buying it, you see it was up to $500. So this is like an example of undervalued assets. So if you buy this project now, I mean, and it even goes back to its like price in the bull market, I mean, you're already money. All right. You are having like it's for it to go back to $500, you're expecting things like you're expecting like 20x already. All right. 20x already. So just this is a big cap project, so it's not even like a small project. It was one of the first projects there. So in the last market. So things like this are undervalued projects you can invest in. All right. So what we're wrapping it up tonight is where we'll talk about risk management and security measures. because when we talk about investing, we must emphasize on risk management. All right, risk management and security measures. So risk management now, number one rule, like I said, the golden rule is you should invest what you can afford to lose. All right. So if you are someone that invest what you can afford to lose, don't use your school fees, don't use your house rent. I think there was my friend that spoke to me one time, was like, how far? Was like, oh no, tell me project I can buy, and and it's a pump in less than 2 weeks. And I was like, Chief, I can't. It's my daddy doesn't have any project, all right. So I can't really tell you any project that will pump in 2 weeks. That I'm sure that will pump in 2 weeks. All right. So don't be like that, my friend. That's what I'm saying. Be careful. Don't go for things like that. Even if someone tells you, oh, there's this project that is pumping tomorrow. All right. But let's say insider information, please. Even if there's an insider information, don't use your school fees because nothing is 100% guaranteed. All right. Then another thing added to this thing now is avoid. I don't know some of you if you've experienced this. What you call pump and dump groups. All right. There are pump and dump groups. There's this group you join. They tell you, oh, they'll be pumping a token by 8 p.m. And by that 8 p.m. they drop a token. Before you are buying it, they are dumping on your head. All right. I've been in those things, so I'm sharing from experience. Avoid such groups. All right. So use cold wallet storage. So this one is a general advice. Is you can use cold storage wallet. This one is if you have big funds. I mean, you can't have $100 and you're looking for cold storage wallet. So this things like we all heard about the whole Bybit hack. They got hacked from a store. You see, like the cold wallet storage, it was around 3 billion, maybe 1.4 billion that got stolen. So these are kind of funds you put in cold wallet storage, not $100. That's a joke though. But what I'm just saying is if you have heavy funds, please, you might consider cold wallet storage because that is one of the ways to avoid getting hacked. Hack only happens when your funds are online. That's one thing you should learn. When your funds are online, when your money is online, that's when hack happen. But when your assets are offline, you don't have, nobody can access it now. I mean, if I put my funds in I've shown you guys what a cold storage looks like now. All these Trezor and like they look like USB flash drives, or the USB they look like flash drives. All right, so they just small and portable. You just transfer your phone and you keep it out. So it's when they come online that they become vulnerable. All right. So if you have heavy funds, please, you can separate funds. And another thing is don't put your funds in one wallet. If you have someone that is a heavy trader, maybe trading thousands of dollars, I don't really think it's very wise for you to put all your whole funds in one wallet. All right. Because just imagine that wallet is compromised. So everything they borrow will disappear. For those who don't understand Igbo, I meant that if you put all your whole funds in one wallet and it gets compromised, you lose everything you have, and which is like a wrong financial move. So learn how to the way I diversify portfolio. All right, diversify your funds like that. Use different wallets. All right, and hold some of your crypto assets. Okay, you can have up to 3 different wallets, and just split your funds. It's just helping you reduce risk. It's called risk management. All right. So for people who use things like centralized platform, enable two-factor authenticator. All right, password. For avoid high risk leverage trading. I already mentioned that all these futures trading, you are using margin, 50x margin and 20x margin. Please stay away from those kind of moves. Then stay updated with market trends. Stay updated with market trends. Know what the market is saying. Pay attention to it. Just stay updated. And one of the ways to stay updated is to stay active in our community. If you are active in Cascade, you know that we put out a lot of information that help you get better. All right, we put out a lot of information that helps you get better and stay updated what's going on in the crypto space. So yeah, um, in general, I will just give a recap statement. Crypto investment is a good idea. I mean, that's part of the reason why I have this community to encourage people to invest in crypto. But you have to understand the risk and understand how to avoid, you know, avoid and minimize some of these risks, so that we don't fall victim, so that you don't make money and someone else helps you keep the money, or takes the money away from you, whether through carelessly trading, or your wallet getting compromised, or stuff like that. So you just have to be careful and make the right decisions. So I don't know, does anybody have any question before I hand over the mic to our host?
Yeah, I have a question. I have a question. How do you, cause this is something that have happened to me of recent this year. A lot happened this year. So, how do you discipline yourself? Okay, you have some coins or some tokens you have kept in your sports wallet, and then you see an opportunity, and because of you want to partake in the opportunity, you go to your spot wallet that you have told yourself that you will not touch. You're holding them for the bull run, like the bull run is coming. So then you now go and sell off those tokens so you can get some USDT, and then you go to ape into the ones you want to that you sold them for, and then you lose it. You lose that one, then you have also lost your initial savings. So how do you handle situations like that when you don't have USDT but you want to take up a trade? How will you do it
That
so you don't? I don't know if
that's
you get the question.
yeah. I understand your question. That's one thing I like. Can you hear me?
Yeah, I can hear you. I can hear you.
That's one thing I mentioned. Alright. That's one thing I mentioned earlier. That when you are investing, always learn how to keep some USDT aside for things like this. Alright. Let's not go to the aspect that you lost the money, because I mean, if you made that move and you made profit or you gain from it, you won't be complaining. Right. So you'll be feeling like a smart guy. But actually, that is a very rough financial move. Even if you make profits from it, when you invest in a cryptocurrency, especially when you hold them for a long term, learn how to be patient. Every trade, every uh, green candle, every update is not for you. Learn it and let it sink in. All right. Cloud chasing or chasing forms is something that will end your career very fast in the crypto space. If there's one thing I've learned is how to be content. Sometimes I think when this token launched, uh, this Tron, when it launched, someone told me it was still around 6 billion when someone told me about it. I was like, this project is 6 billion. Uh, and I checked it. I was like, it just launched 2 hours ago. So the phone I checked, it wasn't the phone. Like the wallet I checked it wasn't the wallet, because I trade with Bonk. So when I wanted to change it, it wasn't the place I had for. So I just checked it, and it was early morning. So the person was like, "Ah, see, Trump launched it." I think it was during that his inauguration. Like I think that Trump thing was a day before the inauguration, if I'm correct. So so that was it. So you see, so I didn't buy it. Actually, I felt bad because I got the update, because I think it moved to, it still moved to about 70 billion. Right? I think the project went up to 70 billion, if I'm correct. Yeah, it still moved up to 70 billion market cap before it came down to 13 or what. I don't know, it's currently into something, something billion market cap. So what I'm trying to say is, these things, you have to learn discipline. When there is an update to buy a product, even if you don't have money to buy it, uh, just the, just the, because even if you sell that one and make profit, what if that one you sell would have given that one you sold to buy that one would have given you more profit than profit you make from that one. So it's just learn how to be patient, discipline yourself. You don't pursue every form, add self-control to this thing because I know there's how once you are dealing with money, it can be intoxicating and you want to make the most out of everything you see out there. So you have to fight those kind of thoughts. And if you're around circle of people who are not content, please break from that kind of circle. If people you know with or people who give you trading updates are just clashes that they are jumping from one token to another, you have to. It's not like excuse me. It's not like it's bad, but you personally have to develop your personal discipline about these things. All right, you have to develop your personal discipline about these things so that you don't make wrong financial moves. All right, sure you understand.
Yes, sir. Yes, sir. I understood. I understand it. Thank you.
Hmm. Any other question from anybody? Okay. In the absence of any question, Danny, over to you.
Yeah, thank you, sir. Thank you, sir, for such a value-filled session. Okay, I'll be ending the call now.